Hi, and welcome to an episode of the Jet Rails podcast. I'm Robert, your host, and today we're going to be talking about e-commerce uh, orchestration in your checkout, dealing with payment orchestration that's going to make your CFO smile. uh, Not something that often happens when we're talking about e-commerce. That usually it's pretty straightforward in a lot of ways when we talk about payments, or isn't, or basically that just the choices for finance are pretty limited. And I came across some really interesting topics around payment orchestration and thought that we'd have our friends at Gravy spend some time chatting with us, answering some questions. So, with no further ado, we've got John here from the Gravy team. John, would you do the honor of introducing yourself?
Yeah, so I'm John Lana. I'm the CEO and founder of Gravy. I've been in payments forever, so I kind of started in this in 1997 with my first payment company called CyberSource. They kind of invented it was probably the first internet payment gateway. So I went from there to when we sold it to Visa. I moved on and joined another payment company, and then 16 long years ago I joined PayPal as one of the early employees of PayPal outside North America, and did that for many years. So really, all I've ever done is payments. I'm very boring at parties.
Well, that's because you haven't been hanging out with the right people. I think our listeners would have a lot of fun with you. No, well, I'm certainly very familiar with CyberSource and PayPal for that matter. But and the acquisition by Visa of CyberSource, along with other gateways like Authorize.net, and so there's certainly a lot of history there, and I think history that's still being written because the challenges that are facing the e-commerce sector, the e-commerce industry, are evolving. Economies of scale, of course, is a phrase that comes to mind. That problems that weren't as big a deal in the early days of e-commerce, when it was just lovely to be able to take an online order, are certainly changing. But before we get deep into what's going on in payment tech, can you tell me a little bit about how Gravy got its name? And especially, I've got to ask you about the spelling because there's
Sure.
some uniqueness there.
Yeah. So as you can tell from my accent, or maybe less now, I've been living in the US for a bit, but I'm actually British. So and Gravy in London, which is where I was, means money. So that's what Gravy means is a slang for money. And the four, if you press shift and four in your keyboard, you get a dollar sign. That's kind of the marketing story here. The truth is, 5-letter domains cost about $1.5 million, and we were a seed funded startup, so we had to go for the four in there. But ultimately, what we've learned is people remember it very often. They remember what it is, and it gets a conversation started. So we made a decision to stick with it, and that's our brand.
I haven't had a problem with it yet, and it's funny
Mhm.
that I know other companies that have injected numbers in the middle. Octane comes to mind, and it stuck with me. So, uh, and you wouldn't always think it when you first see something like that it just seems a little unusual. But I think the unusual part works in its favor. So, uh, yeah, particularly interesting. Now, when I think about e-commerce payments, you know, I am seeing a little bit of a ramp up in the space where we did go for years and years with more basic gateways, and there were new ones, and maybe there was a new feature here or there or benefit to using one as it related to maybe fraud, or I don't know, thinking companies like PayPal that have added a lot in, with Braintree and other things, maybe crypto or some other new thing. But you know now I'm seeing a lot more buy now pay later. There's all these things that are coming up. Are merchants able to keep up with it? Because I don't know, from my vantage point it seems difficult at the very least.
Yeah, and that's part of the reason that we created Gravy, right? The Gravy was born out of frustration. I was sitting there at PayPal investing in sort of early stage startups. That was my last role at PayPal. And I'd go and see merchants say, you should add Venmo, or you should, consider adding this payment type. And they'll all be like, yeah, we'd love to do that, but it's going to take 2 years. And I'll be like, why is this so hard? And that's really a lot of where Gravy came from, is that there is all of this payment innovation happening around the world, and things are changing very, very quickly. And because of the way that merchants have built their technology stack, and the fact that they have these huge teams of payment engineers, means adoption is super slow. So it was that side of it. And then, we're a COVID baby, but Gravy was born during COVID. Um, and COVID has changed things for everybody in many different ways, but particularly in e-commerce, everyone had to go international pretty damn quick, and had to sort of tailor their business that perhaps was like 15% online to 100% online very, very quickly, and they learned a lot of the lessons here. I mean, you think during COVID, the people were sitting at home having to order things from home. Now, if you're part of that huge group of even just North Americans that don't have a credit card or don't have credit rating, or unbanked or underbanked, we should say, how the hell did you buy stuff when you needed to stay at home? And that, to me, made me a little bit worried about how you know how, if we were creating a e-commerce like environment that was inclusive of everybody. And so for me, Gravy has the passion of wanting to help merchants spin stuff out quicker, but also, can we get new payment types enabled? Can we bring more people into this environment so it's a bit more fair?
Yeah, there's and we've seen, I think, iterations here, where subscriptions became more popular and continue to live on, that people don't always realize how much is happening in those checkout steps, and how many things you could be doing differently or could be offering consumers that might speak to a certain market segment, or might do really well. I know we had the team from Catapult on some time ago on the podcast, and just talking about things like consumers that have lower than stellar credit, right? Or that have
Mm-hmm.
no credit. They're new to the country, or they're college students, or any number of situations, right? It's not necessarily that they killed their credit, or maybe they did, but they have needs.
Yeah.
And so how do we all come together to best service these shoppers? And I'm with you that I've seen for years and years where, for merchants, and somehow in terms of their backlogs and what's going to change in a website, adding that new thing in that's never been there before, that's more, the reward and loyalty program, or gift cards, or this or that. Sometimes, because it's seen as more revenue generating, comes earlier in the backlog, and
Mhm.
payments things sometimes linger a bit. But it's also that I think that there's this perception, that is, when someone's put in a gateway, and the amount of testing in their, staging or dev site, in their live site, in sandbox mode, and in live mode, and dealing with back and forth and fine tuning, that it's not necessarily a quick one off from getting it installed and working to having everything flowing properly for fulfillment and finance and every other step. There's a lot of movement there. And so
It takes about 8 months on average to roll out a new payment type across the
wow.
industry. So that's, and I always joke, I've never met a happy payment product manager, because they only ever get what they need. They never get what they want. And
By the time that they're done integrating the last thing, yeah, they've got a whole other laundry list of things that
yeah,
they're looking for. And well, and so it mirrors some of my experience. I don't know if the average I've seen is a full 8 months, but I could see it. And, and I think, and especially back to economies of scale, the bigger they are, the
yeah.
longer I'm sure that, and certainly from my experience, that it can take. So, so that's thinking about new features and better features and keeping up with trends.
Mhm.
What about backups? Because I've certainly seen big merchants have gateway issues for one reason
Yeah.
or another, payment processor issues for one reason or another, server issues at the gateway, or they something to do with underwriting where they're now selling more. We certainly, living through the last couple of years, saw businesses that skyrocketed in their online sales. And if you're not approved for certain growth, or certain sizes of orders or other things, you can start to have challenges with some of your payment gateways and processors. Do you see this also fitting in, that basically people don't have a good backup in a lot of cases because it's too hard?
It's because, again, you get what you need, you don't get what you want. So I think, like, people generally learn that later on. But if you look at the mid-size and up market in the US, over 50% have two or more PSPs already. So it's something you need to do as you get bigger. Just generally, and it's not just technology backup, is this certain PSPs are better at certain things than others. And, if you start to go international, absolutely, you need more because, if you're just accepting cards and you go to a market like Germany, where I think it's still only about 14% of Germans even own credit cards, like you're not going to be able to sell there, right? And then you go to Southeast Asia where cards aren't really used. So you need the option to keep on adding more gateways depending on your business. But even if you're a North American only merchant, once you get to a certain size, you want optionality, right? You don't want to be tied just to one PSP because ultimately, if you shop around, you can probably get a better price. But not only that, you can give yourself more freedom later. There's some things that you accept the cost of when you're smaller. And when you get bigger, you realize how much that cost actually is.
Well, when we're talking percentages or pennies, they start to really add up as your volume goes up and what have you. Now, I on that vein, just digging in there a little bit, uh, would you say if on average businesses have at least two payment service providers, would one of those be something more like a PayPal or Amazon payments or something that I would consider maybe a more unique provider where the user probably already has a saved credit card, has an existing account?
No,
Or
actually, so I think the stat comes from pure PSPs, or payment service providers, so providing card processing. On top of that, I mean, PayPal's a good example. You can get a PayPal through your processor. You can do a direct connection to PayPal. There's many different ways to connect it, but that stat's purely around PSPs. I think merchants now, I mean, at a very minimum, you should have PayPal. And to be honest, you should be adding some form of buy now, pay later if you're selling a decent, a larger value item. But even looking now at the new payment types coming around the world, if you go to LATAM, for example, every country has its own favorite way to pay, and it's not cards. So you are constantly adding other ways to pay, and you need to keep on adding those as you expand. And you don't want payments to be the thing that stops you rolling new markets out.
yeah, and you know, so we've touched on here a few different items, and really, I want to make sure that we talk a little bit about orchestration because I think for me that's some of the most interesting out of your technology stack that your team has been building and iterating on, and just in general where things can go. Because as we've alluded to a little bit here, you will wind up with different options in that checkout for the shopper that have different implications. Some are going to match up better with some shoppers for reasons that have to do with geography, but in some cases it may have to do with something like the size of the order that and it may not even impact the shopper as much as it does the seller. The merchant is going to pay maybe they've got one option that's going to cost them a few more pennies, but a lower percentage, which is great for a big ticket item or a large cart. And they might have another that's only a few pennies and a larger percentage, which is great for smaller orders.
Mhm.
And that normally there's absolutely no thought that goes into that. That there's just they get what they get, and there's money left on the table, or money perhaps, if we want to think about it that way, overpaid in gateway and processing fees because there's no logic around it. That it's just thrown out there that here are the options. Shopper, you pick what you want,
Mhm.
as opposed to giving the shopper the option that the merchant would be best served with. Is that really at the heart of the orchestration? Do you find that there are other areas that really are important to those orchestration steps? What is it that if we're talking about finance folks that gets them excited about being able to control
Mhm.
which things are appearing to those shoppers in the payment section?
So there's two sides to orchestration, right? There's what we call back end orchestration. And back end orchestration is how you route the payments. So if the card is from Brazil, send it to eBanks. If it's from Europe, send it to Adyen. So that is what I mean, a lot of companies are calling orchestration, and that's back end routing payments, routing it to the cheapest route, all the rest of it. So from a finance perspective, that's the optionality that gives you the freedom to move, change, perhaps deconstruct some of the gateways so that getting different pricing because you're going direct to payment types, etc. So that's back end orchestration. What you're talking about is what we call front end orchestration, and that makes us pretty unique in this space. And most of the orchestrators out there are only doing back end. We have front end orchestration, which means we allow a retailer or a merchant, in this case, to decide what payment types are visible to that consumer for that product at that time. So it's not, there's many different facets to that, but with our service, you're able to send through a variety of different metadata. And based on that metadata, you can customize that checkout in real time. So I'll give you an example. One of our customers, 11 Sports, does soccer streaming, right, around the world. They stream soccer matches all over the place. With them, they're streaming to markets in LATAM and other places where some of the payment types take longer than 1 hour. Actually take up to 3 days for them to actually get the money to you. Now, if you're streaming a live soccer match, this is not ideal. So with them, they're able to send metadata through. Simplicity is the time of day match, and based on time of data match, then and the rules they put into in the Gravy workflow, that will determine what payment types are visible for that customer. That's a very simplistic format. A more complex one is a merchant sending us the entire shopping cart, right? So everything that's in their shopping cart. And then we with the rules, scan through it. And if there's something like alcohol or cigarettes in there, then we can't offer PayPal because PayPal doesn't allow alcohol or cigarettes, or a few other payment types don't. But if there is a TV in the shopping cart, then we can surface buy now, pay later at the top. So with our workflow engine, a merchant is in a visual no-code layer able to really configure rules around how they're going to display it to the customer. Because the lazy way of doing it is to display everyone and let the customer sort it out. And we know that, the more choice, the more work you make a customer do at checkout, the less likely they are to check out. So
Analysis
this allows
paralysis.
you, this allows you to actually give them not only what they want, and a really good example of this is buy now, pay later. Right? Everybody talks about buy now, pay later and just adding a provider. The truth is, it's tribal. And you're seeing this data coming through very strongly in Asia at the moment, is consumers have their favorite buy now, pay later provider. They don't want at the end of the month to get their bank hit by 3 different providers, all from a different place at the same time because they've lost track who they paid for what. They actually have one they like, the one they want to stick with, the one that they go and check to see how much they're going to owe in a month. And now more increasingly, ones are going to give them rewards and credits. If you're not offering that one to that particular merchant, that particular consumer, they're not going to shop on your website. And they are very religious about it. They are literally picking out the provider that they want to do. And sorry, you don't support this. I'm going to go and buy this item somewhere else. And the different buy now, pay later providers also have very different demographics. You look at some of them, the demographic is women under 30, others where they're millennials, others where they're slightly older. So you need an orchestration platform because you need to know who that customer is, what their demographic is, and what you're going to display to them, because you could scare them off if you don't do it.
It's interesting, and I haven't heard it explained quite that way, and I can really appreciate that. Look, as a consumer, I remember going into stores way back when they'd all be pitching you at the checkout to get their store credit card, and it was like, how many of these do you think I'm going to walk around with?
Yeah.
If this isn't a store that I really shop with frequently, this just doesn't make any sense. That it's this. I would imagine that a lot of the same psychology applies here, that you're already up and running with some major buy now, pay later options that like I was suggesting earlier, maybe there's some for people with prime credit and some for people with subprime, et cetera, that, that there's a different option there. But if you don't have what they're looking for, hard to be found. And in some cases, they may even go right to the website of their favorite buy now, pay later if they know they're buying a big ticket item, and find merchants through there. That a lot of them now have these wonderful directories. So it becomes even, to some extent, a marketing tool to build awareness of your website and your brand to that specific audience. We're seeing that across payments, I think, where there are just a lot of providers that now work in that way, suggesting, their member merchants that you can work with if you use their solution. So it's becoming interesting that everyone wants to sort of build their own ecosystem in that way. Which,
Mhm.
hey, I mean, it's worked well for companies like PayPal. So there's definitely a good book on this one already to follow. Um, Aside from we've touched on a lot, but from the things that we've talked about the basics of orchestration, front end and back end, and having some redundancy and being able to move faster. Are there other things that you see coming out of the kind of technology that your team is building as it relates to the e-commerce managers or the CFOs, or is there some other big ask that they have or need that they have that's sort of coming together through this technological process?
The-
Or
the- yeah, there's three things here, right? The thing that links everything we do together, and if you talk to any of our merchants, the number one reason they go with us is speed to market. So whether it's speed to new market, rolling out some functionality they need to, that's where orchestration is strong in this space. So instead of needing this army of engineers to build this for you, you now have a platform that allows you as a CFO or your product manager to go in and configure it without needing the army of engineers. That's part of it. I think two other very strong things are reporting. Like, don't forget the accounts department somewhere in the back end has got to work out who paid for what and how it reports back into finances. And the more of the payment options you add, the more you'll hear the accounts department getting upset, because ultimately, some of these payment types do real-time settlement, like PayPal. Others do same day. Others do
so
one
they
week. And you
batch
go to
out in the
Southeast
evening or
Asia's, you end
something.
up like 30-day settlements sometimes. So, you know,
Yeah,
your poor accountant sitting there going, "This, I know they sent this item out. When are we actually getting paid for it?" And then you don't want to be logging into 14 different websites to work out who paid for what and reconcile it. So consolidated reporting, very, very important. That's, again, is something that we have in the platform. And two other parts of this. The second one is vaulting. So tokenization is a hot subject across payments. And there's something called PCI, which, as a merchant, you need to hit certain standards. And the way that most merchants have solved this is by working with their payment service provider. So they send the card to the payment service provider, who returns a token. From that point onwards, you can use that token to bill. The problem with that is that token is specific to the payment service provider. So now, if you want to use a different payment service provider, you're kind of out of luck. Theoretically, your original service provider is supposed to provide that untokenized details back to your new one. Reality doesn't always happen that way. But the truth is, as you go down, you want an experience where you have the freedom to move. So tokenization is a big one. There's something called network tokenization, which is coming now in the payment industry, which is where cards are tokenized at the acquirer, so Visa, MasterCard, etc. And that means that the token that you hold as a merchant is specific to you, which means we'll have less, if the network is breached somewhere, cards are stolen, you don't have to go out and cancel everybody's credit cards, because the only thing they can steal is the token, which is specific to a merchant. And that is something that's going to come with some advantages in markets. People are talking about interchange savings in some places, etc. But it's hard to manage all those different tokens. So with the Gravy, we have a vaulting solution that we built in that allows we tokenize across everything that you need us to tokenize across, and we return a universal token to you, which means your customer will be able to pay you whatever happens now or in the future. That's definitely a big industry need that's coming through. And then the final thing is data residency, and this is getting a hotter and hotter subject. You've already seen India, Indonesia, China, and Russia, which we can ignore for now, that have all rolled out very specific rules about where your data needs to sit. And India's probably the most, the hardest one is payment data is no longer allowed to leave India for Indian customers. So if you're busy using your US website selling into India with a US PSP, there is problems ahead. And so that's part of the reason we built Gravy as a cloud infrastructure, is we can spin you up an edge in India, in an Indian data center for your Indian customers, that keeps you compliant to data regulation. And I see more and more countries moving to that data residency model. You've got GDPR in Europe, you've got the Californian laws coming now, but a lot of this will really you need the flexibility to determine how and where and who's got access to certain data. which you can only do with a cloud solution.
That's interesting. you know, I, at JetRails, because we deal with web hosting for e-commerce day in and day out, we deal with a lot of PCI compliance, keeping them secure everywhere on site.
Mm-hmm.
While often there's a hosted checkout that's dealing with or hosted, payment solution and gateway that's dealing with collecting the money. And similarly, that we may have to spin them up in AWS in a certain region, or deal with certain inevitabilities in order to be compliant with an ever-changing landscape of payment regulations around the world. I think it's particularly interesting looking at this through a few different lenses, um, because not only now do you potentially have this happening in different places, but circling back, let me actually ask this: when the merchant is managing something through your admin portal,
Mm-hmm.
um, how how much time does it take them to add, remove, maybe change some orchestration rules? What is that process like at that point? Because I'm imagining something where you can toggle things on and off, and it's going to be relatively quick, which
Mm-hmm.
is what's missing for your average. But is it as simple as my imagination is
Yes.
is trying to
Yeah,
make it?
so it's a no-code interface that we built. I mean, it allows you as a non-technical person to go in. We have a workflow engine where you can build the rules around how things flow. Adding a new payment service provider is literally you go and get your credentials from your safe payment service provider, come in, type them in the Grady, press go, and you're live. So it's real time. I mean, we have real time deployment of rules, real time deployment of PSPs. You literally can switch it on and do it in like 3 or 4 clicks, and it's live instantly. And same with switching it off. So it gives you a huge amount of flexibility. And so back to what we said at the beginning of this conversation about enabling new payment types for perhaps underserved or other groups of people, I think this gives you the freedom to experiment. So how often, you've talked to a merchant and said, look, we've always wanted to try a cryptocurrency checkout, or we've always wanted to try open banking, and but we haven't done it because it's 8 months and it might not work. And that's where I get excited. Is we look at open banking in Europe, which is it's taken a while to take off, but every single merchant that we've gone live with has enabled open banking. And they're loving it because before didn't know it was going to work. With Gravy, 3 clicks, you're on, it's enabled, off you go, and why not? And now I'm expecting, as soon as we've got the cryptocurrency rolled out, I'm expecting lots of merchants to finally get to try it and see if their consumers want to use it. And it's not costing them engineering, it's not giving them engineering debt, all that kind of stuff. It's literally 3 clicks and they can experiment, do a bit of A/B testing, and off they go.
Well, and I think that's part of the magic is that, I've in my marketing experience, I've always been told don't use yourself as a barometer because there are other people that shop other ways in the case of e-commerce that, might be more interested in a certain crypto checkout or buy now, pay later or subscription or something that maybe I wouldn't be. And that, the only way to really tell in a lot of cases, you hypothesize, but it's to test. And that testing medium, to be able to A/B test and what have you. Did we get an increase in overall checkout? Did we get an increase in average order value? Did we all the major metrics by offering certain things, that's often missing. Now, your system is only really dealing with the payments, not the entire checkout, not the shipping and perhaps sales taxes and other things. Those would potentially be computed right by the e-commerce platform. You're really just coming in and offering what I'll refer to as a SaaS payments module that's going to take over the ability to manage all those different payment providers.
Yeah, so we're not SaaS, and that's the interesting thing about Gravy is that we're built like a cloud company. So we're somewhere between PaaS and infrastructure. So I can never pronounce that one, but infrastructure as a service, right? Because each merchant with Gravy gets their own independent cluster. So we spin up a cluster for our merchants wherever they need them in the world. It's sole tenancy; they're not sharing it with anyone else, and it's built for them. And what this means is you can roll out, complex network edges with multi-regional, et cetera, et cetera. And so it fits in it fits in much more to how the merchant likes to run their website. So, for example, you're selling into somewhere like Brazil, where there's quite a latency issue. If you try and run your website and your payments from North America, you can fall into little latency problems with the checkout for the consumers. We can spin you up an edge of gravy in Brazil in a data center down the road from your payment processor, so your customers have that nice rollout. So that's why we're not a SaaS. We don't run a service, we run infrastructure.
Interesting. You were talking a little bit earlier about reconciling, and it reminded me, I've heard horror stories about some of the SaaS e-commerce platforms and how they reconcile payments in some cases, very specific, uh, where it can drive a finance team crazy trying to deal with that. And depending on the SaaS e-commerce provider, that they have very little control over payments, or they're going to pay major fees to use some third party, things like that. So I imagine that that for those kind of users, that of even more interest, the ability to have a lot more control over the gateways and the payment processors in order to control the flow of data.
Yeah, it's flow of data. I mean, it's hard. I mean, everybody reports in a different way, and what we pride ourselves at Gravy is we standardize this, so we can give you standardized reporting. You go and see all different types of payments in your reports. You can search them, whether it is a wallet, an open banking, a crypto. You can see it all reported to you, so you're not spending the whole time trying to find things.
Yeah, and so thinking about, I guess at that point, we're sort of looking at this independent payment structure. Are there reporting tools as well to help to identify, so not only the ability to set orchestration, but the ability to really get a feel for the total cost, the total lift, things like that, of turning on some of these, of A/B testing, or some kind of multivariate testing, or things that you intend to do down the road that would address some of that need? Because I know that the tools are often great, but it's the data that helps you to use them sometimes, that can be the trickier part.
Yeah, so that's coming at the moment. We have a reporting. We are rolling out what calling the payment advisor that will sit there and help you determine what you can do better. And that will look across big data that we're going to have spread across merchants. So what is working in what markets, but also tribal knowledge. We have over 140 years of payment experience at Gravy. We're a small team, but we're all payment geeks. So I mean, to take some of that information that's in our head and translate it there. So, like the example I gave you about Germany before, we can see your volume rising in a certain market, and we can say to you, you're getting more business in that market. Firstly, an edge might work. If you spin it up there, it's going to give you, lower latency and a quicker processing. But these are the payment types that other merchants in that region use that are larger volumes. Here's the links, here's the numbers, phone numbers, email addresses to talk to that provider, so you can get yourself set up with an account, and off we go. And we're also going to be building reporting around auth rates, how quickly things are authing, as well as costs, like how much are these payments costing you versus other payment options.
Yeah. Now, I'll throw a curveball at the end here. I've seen a rise in carding attacks in recent years. At JetRails, we do a lot of bot mitigation and things as part of the firewalling and the overall stack of trying to block these kinds of attacks. Um, Now, you're not providing the full checkout page. You're dealing with payments, but and I know there are a lot of companies that deal with fraud prevention and mitigation and things in the e-commerce space. Do you see that as an interaction, or a component somewhere of your stack at some point?
Yeah, so we announced last week, week before last, I should say, at MRC, that we are now starting to roll out the anti-fraud providers into the Gravy stack. So the way that we view them is exactly how we view the payment companies. So you will be able to deploy one or more anti-fraud services. And I think that's where it gets interesting, is most cases, you pick one and go with it. And that's what most people have done. But we know certain anti-fraud providers are better in other markets. And we also know some are better for digital or streaming goods than they are for physical goods. So with Gravy, the aim is to roll out the ability to select the fraud provider for that product, for that item at that time, and mix and match. So you'll be able to try different fraud providers in different markets, and there shouldn't. Integrating payments is hard. Integrating anti-fraud is even harder. So we're going to try and take that pain away and do it that way. But also, like as you say, that anti-bot stuff, I think there's a lot we've noticed over the last few years. If you start to mitigate, you put in anti-fraud or anti-bot technology very early on, or anti-sweat factory technology really early on, you can prevent having to make a fraud call later, because you take out a huge percentage of potential fraudsters even before payment details typed in.
People don't
But
realize the percentage of their traffic that's just bots.
yeah, exactly.
And I have friends in the space companies like Perimeter X that'll show me stats where it's like 50% of the overall hits to the site, and like, tremendous.
Mhm.
Um, so I think that that's a space that as that bot technology becomes more accessible to more fraudsters and things, it's already very pervasive, but
Yeah.
I think that it's a problem that we'll continue to see fester, and so it's going to be technology problems are going to be answered by technology solutions in this case. So I'm glad to hear that. And I had a very timely question, apparently. Um, so I'm glad that that came to mind. I do see that as it's not only which solutions are going to do the best job of blocking the fraud, but I always love to remind people that it's also which solutions are going to let the most good orders through, because you'd be surprised that the wrong fraud solution will do more harm than good. It'll block too many good orders, get in the way of shoppers and your fulfillment team,
So I mean,
and
in a previous role, I used to do this, help merchants with their fraud services, anti-fraud services, and I used to say, I can get your fraud to zero. I just switch off your checkout. Like it's that simple. Like there is a balance of convenience, there's a balance of protection, and it constantly needs to change. And that's why I'd argue orchestration becomes very important, because you are going to have to be nimble and flexible.
Awesome. Well, John, this was an absolute pleasure. I really appreciate you making yourself available for us and our audience. Any final words before we wrap it up for the day?
No, I think look, orchestration is something to think about early in your process. You don't need it right away, particularly if you're selling into one market. But as you grow, it makes sense as an investment, almost like an insurance policy, because it's going to give you the flexibility later when you start to getting to need 2, 3, 4, 5, 6 payment processors. Having orchestration in means that it's not payments that's slowing you down.
Awesome. Well, I really appreciate it. I hope we'll get to chat like this again sometime soon. In the meantime, to our listeners and our viewers, as always, thanks for tuning in. Stay safe, stay healthy, and happy selling out there.